God, investors are stupid.
Xbox,
Twitter, Uber, Postmates,
Netflix, MoviePass,
Google, Facebook, eBay,
DoorDash,
Apple, Amazon, Airbnb,
The Apptrepreneur. Hey everyone, this is Kevin the Apptrepreneur. If this is your first time here, please do me a favor. If you like this video, consider clicking the subscribe button and ring the bell to know when new videos are going up. We do pretty much, for the most part, daily uploads, but still, it's nice to be notified, right? Well, this is probably going to be a short but sweet rant because, God, Lyft investors are stupid. They are absolutely stupid. You know what? Here, Lyft stock jumps after co-founders tell Wall Street Journal, that's WSJ, they see profitability a year earlier than suspected. Seriously, this is what happened. They made that little announcement in the interview, and it went from like, oh, $40 to holy moly, about, geez, it got up to $45.10 before slightly trickling down again. What on earth happened that made it jump that much? I mean, it couldn't have just been this, right? Clearly, when they said this, they outlined something that gave investors real, honest hope. I mean, this stock opened at $87. It got down to $40. So clearly there was something more than just wishful thinking and hoping, more than wishing and hoping and praying and letting that they care. Hopefully there was more than just that to get the stock to jump, right? Oh no, this is the land of Uber and Lyft. These companies, their stocks, they don't run on real world logic. They don't operate on the assumption that, you know, you need to provide real verifiable evidence that you are going to be okay. No. It's just fairy tales and unicorns. Maybe that's why they call it a unicorn. I don't know. Let's look at this real quick. Shares of Lyft jumped 6.5% on Tuesday after co-founders Logan Green and John Zimmer said the company could become profitable by 2021. Uber stock rose 3.5% on the news. So that's how powerful this statement was. They brought Uber stock up as well. Lyft will be profitable on an adjusted EBITDA basis by the fourth quarter of 2021, which is 1 year earlier than analysts were expecting, Green said in an interview Tuesday at the Wall Street Journal's WSJ Tech Live conference. EBITDA is a measure of operating profits before financing related expenses like interest, taxes, depreciation, and amortization. Quote, we have in the bank over $3 billion. We have a clear path to profitability and the team is executing well. We need to build trust with a new class of investors, and with 2 quarters beating expectations, we're excited for the next few quarters. Yeah, well, you also lost a lot of money in those last couple quarters. So anyway, Lyft and rival rideshare service Uber have been in a race to reach profitability amid growing investor skepticism around money losing tech company. Whatever. Analysts have grown more confident in the company's potential. In August, Guggenheim analysts projected the company could become profitable in 2021 instead of 2023 as a result of price increases. By the way, that comes in the form of those upfront pricing things that we kind of talked about a little on yesterday's show. So here's the thing. I'm not familiar with the EBITDA. I'm not. So maybe I'm completely way over my head. Maybe the failed journalist shouldn't be talking about this. But you know what? Yeah, that doesn't sound like it should be it. Like, they say, we have in the bank over $3 billion. Yeah, but you're losing a few $100 million at least. At least. I believe the last time you lost money was $800 million every quarter. Is that going to change? Did he say that they're going to stop losing money? They say we have a clear path to profitability and the team is executing well. Do you care to elaborate on what that might be? He says, we need to build trust with a new class of investors, and with 2 quarters beating expectations, we're excited for the next few quarters. Well, that kind of sounds like you need more people to buy the stock, and you need to convince them to buy the stock, and you're hoping you'll do it in the next few quarters. What happens if people don't buy the stock? I guess it's kind of happening, so who knows, that one comment, but you're losing money, You're not showing any plan. And by the way, even like you could become profitable in 2021. Well, that's still 2 years or a year and a half. Will be fair, a year and a half. Sorry, got the hiccups all of a sudden. Until you're profitable. A year and a half. A lot could happen in a year and a half. AB5 could go nationwide. Maybe the autonomous car... okay, no, the autonomous cars won't get there. Maybe they will get there, though, and you'll find out how expensive it is to truly run your fleet. Maybe Uber will raise more money. Maybe SoftBank will, take over Uber like they're taking over WeWork. There's a lot of things that could go wrong, and again, you have not shown that you're making money. I mean, the best you could say last time is, hey, we're losing less money. It's like, that's not a ringing endorsement. Most stocks have to operate on profit and results. Netflix, despite making a few $100 million a couple of quarters ago, got hammered on the stock market when they came up 1 million subscribers short of their target audience. This company made money, apparently, because I think Netflix overall loses money because of all the content they make. And the investors cream them for it. Lyft and Uber never make money, and I have never seen analysts so bullish on something that doesn't make money and continues to lose a large amount of money. That $3 billion has a very real possibility of running dry before you get to 2021 if the losses stay between the 800 to 1 billion range every quarter. This is strange. This is really, really strange. The company has not shown to be profitable. They're not growing very much. There's a lot of regulation that threatens their business model. The drivers are still unhappy. Not that, granted, they've been unhappy for a while and clearly haven't been doing anything about it, but I don't get it. Why did it jump? This article said 6.5%. I read as much as 9%. Although 6% sounds a little bit more. Let's see. Lyft shares up more than 8%. Yeah, there it is. So I don't get it, man. I don't get it. I haven't bought my Lyft stock yet. I'm waiting for it to hit $30 because I want to spend as little money on this as possible if I'm going to do this. But yeah, this is. I don't know. Maybe you guys are seeing something that I'm not seeing. Does this make sense to you? Does it? Geek Accountant, can you help me out here? Maybe I'm missing something. I don't know. I'd love to know. So anyway, comment below, like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, of course, but even as little as $1 a month goes a long way to helping the channel run smoothly, and you get access to my Patreon's exclusive blog. Also, if gas prices are getting you a little down, check out the GetUps app below. It's totally free, but you get cash back on every gas purchase. If you want to see more content from me, check out my other channels, Kevin T. Rodriguez, the Apptrepreneur Vlogs, and Autograph Hound. And finally, if you want to talk to me or other fellow rideshare drivers out there, check us out at the Apptrepreneur Hangouts on Facebook. And as always, flame responsibly. Have a good one.